If employees want a pay rise because of inflation, then let's make sure that the people that own the business, their business gets a pay rise because of inflation. Oh, there's no one to do that, is there? If you want a pay rise because of inflation, you're delusional. You're really delusional. If you want a pay rise, it's because you're better and you're delivering more. Not because you showed up to work every day and the cost of living went up. That's not the responsibility of the employer to deal with the cost of living going up. It's your responsibility as an employee to be so bloody amazing that the company wants to shower you with more cash and opportunities. Not.
All right, Bulls and Bears, there we have it. People are not going to be able to keep going unless they get a bigger raise from their employer. And from what we see, that's not likely to happen because inflation just ticked up again. So all the promises that were made at the beginning of the year are failing to come true. And we told you right here on this channel it was going to happen. Welcome back to the channel, folks. My name is JJ. You're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. It is the last day of July. So we're going to be in August here within 24 hours of this recording. And that means we only have 5 months to go in the year. That means fall's right around the corner. And what does that bring? That's going to bring holiday shopping. Well, this is likely going to be one of the biggest years where people are going to have to take on debt. And every year it breaks a record. This year, it's not going to fail once again because people don't have the savings put away. Most people struggling, scraping by, and evictions took a big tick upward. So we're going to look at the vacancy rate, what's happening with rents, and the broader economic view. As always, make sure you're subscribed. Towards the second half of the video, we're going to give you some pretty, I think, insane predictions on what's about to happen. But let's go ahead and start right here. And that is going to be a picture, a view of the U.S. dollar index, folks. Now, what's been in the news over the past couple of days is this right here, this uptick just over the past week, here a few days. But if you look at the big picture here, folks, the dollar is getting hammered. What does that mean? That means you're going to get less for your dollar because of why? Higher costs. And that's going to go right hand in hand with higher prices, inflation, higher cost of living, folks. The dollar is getting smashed. Now, you may not notice it very much when you look at the dollar compared to other currencies because other currencies are also getting smashed under the weight of just massive deficits and just trying to finance your way, in this case, the entire country, trying to finance their way out of a economic tough situation, to say the least. But let's take a look at what's happening with rents. That's going to give us a picture on where we're headed here right now and why is this happening. We're going to get into that. Apartment rents dropped again because so many people can't afford the cost of anything. So vacancies actually moved up again. The national multifamily vacancy rate rose to 7.1%. Rents were down also 0.8% from last year. That's not a big drop yet, but it is an acceleration. So we're likely going to see rents continue to drop at a faster pace and vacancy rates rise. Once it gets to 10%, folks, you're going to start seeing noticeable drops in rent, more noticeable. And some people may notice it now, depending on your financial situation. But what we've seen in the past, when vacancy rate is about 10%, the drops in rent are more noticeable. That means there's more available apartments, more available homes, units, and that means landlords have to drop the rent in order to try to fill up those units. Otherwise, they're losing money. They're not making any money. All right, so let's get into some other news here on that same topic, on housing. And look at what's happening, folks. Home prices are down now in 33 major metropolitan areas. And this is a lot of boom towns, a lot of coastal cities taking the biggest hit, right? It's bound to happen, folks. I mean, at some point, something's got to give. When the cost of living keeps going up, inflation's accelerating again, folks. Another thing that has been in the news over the past couple days is the recent inflation report. Let's take a quick look at that before we move on here. Now, what you've likely seen and heard on the news is the fact that the economy, quote, accelerated, folks. You know what that means in real terms? That means just more debt, more spending nationally. And they're going to chalk that up as a good thing, as positive economic growth. But you and I know, after tracking these things, that just means more debt was taken on. So a lot of these things you have to read between the lines or read between the lies, as some people say, read between the lies. Because what's being put out there on most of the news outlets isn't the real economic story that most people are feeling right now. And actually, let's get into some other things real quick before we talk about the latest numbers that I want you to look at today. And what we're talking about is another big strike. Why are people striking? Because they're not getting paid enough, and we're seeing just still massive strikes. People think they deserve a raise, but like we looked at the beginning of the video, the companies are not going to be giving raises big enough on average. They're not going to be big enough to keep up with the rising cost of living. Let's just take a listen to how one individual put it here. Take a listen here.
So while we all have been distracted, this has been going on. Yeah, 40-some thousand port workers are getting ready to strike. Yeah, we're talking about some of the largest ports in our country, including the largest port on the U.S. East Coast in New York and New Jersey. These guys have been striked since 1970.
Folks, I don't think it's going to happen. This is another thing they're putting out there. It's scaring some people, but I don't think it's going to happen. Why? Because people can't afford to go on strike because they're living paycheck to paycheck. So I think they're going to reach a last minute deal. But let's take a listen to the rest of this warning right here.
So you might be wondering, why does this matter? Because they said if they go on strike, we will only have enough food to last us 131 days for the entire nation. Not good, people. That's not the only bad thing. They're talking about an uptick in inflation. Like we need any more of that shit. Yeah, so these 45,000 dock workers handle about half of what comes into our country. If they don't have a contract...
Sorry about the curse words. I don't pre-screen these videos. I play them, so I'm kind of seeing them for the first time. I'm reacting, seeing them for the first time just like you.
By October 1st, they're going on strike. Now, another huge concern here is the fact that guess what's around the corner? Christmas. They told Fox Business that if a new labor deal isn't negotiated by the end of the month, it could have a devastating impact on the overall U.S. economy. Great. Yeah, guys, so the whole time we've been distracted by all this Hollywood mumbo jumbo, we've got some serious shit going on. Let's all just hope and pray that these guys don't go on strike, because if they do, we're in trouble.
Well, if they go on strike, they're going to be in trouble too, because most people don't have enough savings to get by. I don't want to say zero, because people have something in the bank. But for most people, the something in the bank is just enough to pay this month's bills. And if they don't get their next paycheck, they're likely going to start missing it, because why? 70+% of people living paycheck to paycheck, folks. So people are backed into a corner. Rents usually drop before the housing market really starts to see noticeable declines. We've seen that in previous economic downturns. People just don't have the monthly cash flow to continue to pay these high rents. So we're going to continue to see rental declines not only drop, but start dropping steeper. And every time we look at the numbers, we see things are accelerating in that direction. Now, there are some bright spots, because these things bring better deals, so to speak, bargains. For example, costs of some things are dropping. Let's take a look at what's happening with EVs right now, electric vehicles, people. And this is something that really nobody here should be surprised about. I'd be surprised if you were surprised, because we all saw this coming. We saw the massive run-up in electric vehicle prices along with every other type of vehicle. But it was especially big for electric vehicles. People thought they were going to save money because gas prices shot up over the past few years. People thought they were going to beat inflation by getting an electric vehicle, but look what's happening. They're losing massive amounts of equity, so to speak, in their vehicles. Their values are crashing in some models up to 31%, folks. 31%. Of course, when you drive the vehicle off the lot, if you buy new, it's already lost 10, 15, sometimes even 20% of its value. But these are the steepest annual declines. This is not a total decline. This is just in the past year, folks. Some models down 31% just in the past year. This would be the Lexus RX Hybrid. Some other ones to name are Renault Zoe dropped 21%, and the Nissan Leaf dropped in value by 20% just in the last year. Imagine if you had this vehicle, one of these vehicles, 2 or 3 years. You're probably down 40, 50% already in just 2 to 3 years, folks. That's insane. And the reason I say that may be good news, may be bad news to you, obviously, if you have this vehicle, you're not happy about the value drop, because now let's say you're sick of an EV or an electric vehicle and you want to go trade it in. Well, you're not going to get very much on the trade-in because you've lost so much value in the vehicle. But to people looking to buy a vehicle, and maybe you're still in the market for an electric vehicle, this could be good news, folks, that there are people out there that want to see deflation. Yes. Some people want to see inflation, depending on if you're trying to sell something, if you're trying to unload a home, of course. But most people want to see prices come down. And landlords that are buying these homes right now, they really need to look at what's happening with rents, right? I personally wouldn't be looking into investment real estate right now because I see what's happening with rents. We don't know where the bottom is because we don't know where the end of this economic cycle is going to be at. They could try to keep everything propped up like we saw in 2020. Remember, they canceled rents. They stopped evictions. They stopped foreclosures. They stopped automobiles from getting repossessed. But we're seeing upticks in all those things right now. And back then, the excuse was, oh, the health crisis. So we got to do something because of the health crisis. This time, what's their excuse, folks? There's no excuse this time. I think they're going to have to continue to let things play out. And we're going to continue to see things head in these directions. All right, but some other news that you probably need to be on top of. They just extended the deadline for the tariffs there with Mexico. It was going to be August 1st. Well, they just extended that another 90 days. That's what I said right here. I said nothing is baked into the cake. All these deadlines are really not deadlines. Anytime you hear the word deadline with the economy, you might want to think about it as a extension date, because right when the deadline gets here, they just extend it, right? Extend and pretend that everything's doing good. Now, there are still some existing tariffs that are actually going to be going up, and some countries are going to see tariffs raised by an additional 10%. Now, remember, a lot of companies, a lot of businesses, and retailers, they loaded up on goods and products before the tariffs actually kicked in. And we're starting to see that merchandise finally reach, I think, the end of the warehouse, so to speak. And we're going to start seeing bigger upticks in inflation from here. And just like we told you at the beginning of the year, it takes a few months for this to work out. But once it starts showing up, it's going to be noticeable. Let's take a look at an inflation chart real quick here. And folks, the June numbers are out. Inflation increased another 0.3% from the previous month. And we're now up 2.8%. year to year, and that's out of the Commerce Department. The biggest gain since January. So we said right here on this channel, didn't we? We said it was going to accelerate. Inflation was going to accelerate. And people aren't getting the raises that they need to keep up with the higher prices here. This is the CPE number. And folks, brace for higher cost of living. I mean, what else can I say? I hate to sound like a broken record, but that's what's happening. There are some areas that went crazy over the past few years that are correcting somewhat. Used electric vehicle prices, for example. But overall, costs for new items, everything you buy from the grocery store, the department store, is going to continue to see higher price tags put on them. And if you noticed over the past, especially a year, a lot of the Walmarts, I think maybe even most of them, but a lot of the Walmarts have digital price tags now because they were having to change prices so frequently because of all the volatility in prices and the tariffs, the unknown tariffs, everything else, that they went to digital price tags so they wouldn't have to pay people to change out those little paper price tags that used to be on all the shelves. And some of them still have the paper price tags, and some of them went to some digital price tags and some more volatile priced items. But if you know what that means, if you see the writing on the wall, that means they're expecting a lot higher prices down the road. And this is what people didn't want. People wanted the cost of living to come down, but folks, it's not happening on a broad scale. All right. Also, what we're seeing is the country here, the U.S. is paying 154,000 people not to work. What they did is they did buyouts on a lot of these federal workers. So these people still getting paid right now. What's going to happen when they're no longer paid? If they're not old enough to retire to collect Social Security, they're going to have to go out and find a job somewhere, folks. And the way it's looking right now, one, they may not find a job. Two, it's likely going to be multiple side hustle jobs that are not going to be enough to keep up. And then if you watched our last video, people are even getting tired of tipping, right? Tipping. So all these servers and people that rely on tips, it's now going to be more challenging for them to get a tip or to get a good tip. Maybe you'll get a small tip, maybe no tip, but it's going to be more challenging now for these people. If you look at Vegas, Vegas is collapsing, tourism dropping, and people just don't have the money. If they do have the money, they're still going to go out to eat. The example we showed you, last video or 2 videos ago was Starbucks, how people are still going to Starbucks. Foot traffic is declining at Starbucks, but now people are starting to pull back on the tips because of the rising coffee prices. They're still going up on their coffee prices. So we'll have to see what happens with that, see how that plays out. But like it says here, they're paying 154,000 people not to work, and we're going to see how that plays out when these people run out of this extension fund. Now, also, we did not have a rate cut in the recent meeting out of the bankers. They decided to hold the rates steady, but this recent rise in inflation is going to mean there's going to be a very low chance of a rate cut at the next meeting, which I believe is coming up in September. So it's going to get interesting, folks. Hope you're stacking. Hope you're still doing well, staying ahead of this curve. Hope you're keeping your head above financial water. And you're ready to invest, folks, because there's going to be some nice buying opportunities. Keeping an eye on the markets here, and just keeping an eye on the broader pulse of things right now. And I think there's a lot of risk out there right now. I'm still being careful myself. I'm being very cautious financially on what I'm investing in. But maybe let me know what you're doing down in comments. What do you see coming for the last 5 months of the year? Please let me know. As always, keep stacking. Big love. Bye for now. Talk to you soon. Peace.